Hey everyone, Unblocked is a bi-monthly event series where guests are asked questions in an AMA-style format, focusing on questions relevant to early-stage startups and blockchain technology. Unblocked is sponsored by dlab, a startup accelerator and venture studio that sits within the SOSV family. You can find out more at www.dlab.vc. We hope you enjoy the conversation. So, why don't we start off by just have you introduce yourselves to everyone here?
Sure. Well, thanks. It's a pleasure to be here. My name is Lewis Cohen. I am a co-founder of dlxLaw, which is a boutique law firm based on the East Coast of the U.S. We have offices in New York, Wilmington, Delaware, and Washington, D.C., focusing on blockchain, crypto, and other emergent technologies that really are the key theme being our create disruptive business models, and that's what we think is really interesting about this space. I had a long career in law before founding DLX. I was a partner in two very large international firms for many years, doing a range of corporate and transactional work, focusing on capital markets and in particular structured finance.
Okay. And so, why did you decide to focus on blockchain and focus specifically in that space instead of creating sort of a generalist firm?
Sure. Having been in the capital market space and particularly structured finance space for many years, particularly the years 2008, 9, 10 during the great financial crisis, I realized some of the challenges that the traditional finance system had from working within it. And I worked a lot on policy issues. I worked with the SEC. We did a lot of things, and I saw the problems, but it wasn't until I first started learning about blockchain in 2015 that I saw where some of the solutions might lie in terms of the transparency that blockchain-based systems can bring, in terms of the automation that blockchain-based systems can be. And so I got very excited about it, very interested in it, and being a partner in a large law firm. My first goal was start a group, let's start working on this. And I had tremendous support. The firm I was working at the time was terrific, but it was very clear to me, Paul, that at the same time, blockchain was such an amorphous, rapidly changing area that being inside a large organization, and large law firms are very, generally speaking, very stodgy and not fast moving business organizations, was really not going to allow me to serve clients the way I thought they needed to be served. And so creating a new law firm that had the flexibility to kind of move with clients and apply all the same kind of high standards that I've been applying throughout my career, not a way of lowering standards, but just being flexible, adaptive, and responsive to client needs is kind of what drove creating a new law firm as opposed to trying to do the same thing in an existing law firm.
Sorry, and you focus mostly on early stage startups, right? Like Series A, seed stage, pre-seed stage, or
I would say
where are most of your
mostly,
clients?
yeah. It's a great question. So I would say mostly early stage, but really because those are the people that are kind of creating disruptive and new business models for the most part. However, we do work with some more mature companies, including in some cases some very large, publicly listed companies or multinational companies that are interested in using blockchain technology, cryptographic tokens, and all these things to do something kind of innovative and new. So most of our time we spend with pre-seed, seed, and kind of Series A type companies.
Mm,
But we're very open to whom we work with, and we don't see ourselves, Paul, as so much as a technology law firm, as a law firm for people that want to do something new, different, and interesting. And as we go, I'll give some examples of that as well.
yeah, of course. And so, what first drew you to? I ask everybody this question, but what first drew you to sort of blockchain technology? Like in the sense that, of course, it's interesting, but was it? Did you interact with an app, or was it? What was the moment where you're like, oh wow, this is something? Instead of what was that moment for you? I guess.
Totally. No, it's a great question, and I'm fascinated. The commonalities, because I love asking people that question too. I'm fascinated by the commonalities between people's stories. They all it's a different triggering point for many people, but there's that catch point where everybody comes back to the phrase of falling down the rabbit hole, and I'll describe that in a minute. For me, I think like many people, been aware of Bitcoin. I had not been an early investor, unfortunately, but was aware of it and was intrigued by it. But there was a story on the cover of The Economist. I think it was sort of maybe October-ish or November-ish of 2015. And that was, ironically enough, spurred by a move from a very prominent banker named Blythe Masters, who had left JP Morgan to become the CEO of a blockchain-based startup. And they built the Economist kind of built the story around that move and like, what is this blockchain thing? And is it more than just Bitcoin? And ironically, the company that Blythe moved to, which was Digital Asset Holdings, was actually where my co-founder, Angela Wilson, had already moved to and was their chief legal officer and GC at Digital Asset. So even though I had no idea of that connection at the time, that kind of triggered my interest. What really took me down the rabbit hole was my work with companies in the structured finance or securitization industry. As everybody's generally aware, and I would always sort of joke, the securitization distorted the universe, in 2008 and 9. And in being, someone who's active in this space, I felt all of us on in this trade association felt a high degree of responsibility. And so as I read about, blockchain, and I thought, my gosh, what a natural fit with kind of securitization and structured finance that is very automated already, although we were doing most of our automation through just written contracts, but they were very much writing code in prose. And I thought, if you could do this, but in a blockchain environment, that would be incredibly powerful. In many ways, I think if you look at those early, or any securitization vehicle, you could make the case that those are just analog versions of decentralized autonomous organizations, or DAOs. And I know we'll talk about that a little bit later, but I felt like, in some ways I was coming home to blockchain, in that I've been working on DAOs for 20 years in the traditional finance world. And so that's where I really, and then you get to the point, and I'm sure I hope people listening, can identify. I always say when it's a Friday night and you're sort of in bed and your, girlfriend, wife, partner, spouse, whatever is next to you, say, honey, turn off the light. And you're like, one more article or one more YouTube video or one more post or one more medium. And you realize that you're kind of in that compelled state. And I certainly went through that. And, I know many other of my friends have as well. And then, you're just in for life kind of thing.
Yeah. No, of course. And I guess so you sit at sort of a unique position relative to a lot of other people, particularly people in your industry, because not only do you deal with early stage startups, you sit in the blockchain world as well. So you get a unique seat into how the legal landscape, where it was, where it's going, and how it's changing. So, yep. I mean, how would you say, I guess maybe the question is different for US based companies and companies based in the rest of the world. But I guess starting with the US, so how, it seems to me from where I'm sitting, regulators and the legal landscape is starting to become more favorable towards blockchain companies, but would love to hear your thoughts.
Well, boy, it's a can of worms, and I'll try not to go on it, at too great length, Paul, because there's a lot to be said there. A big part, of course, of blockchain and crypto is not only decentralization, but it's this idea that code is law. That we don't need any stinking rules, and we can automate sort of everything and work at a global scale. And to a certain extent, that's really been borne out, and we'll talk more about DeFi in a bit. And so part of blockchain and crypto and these communities are kind of like, yeah, make whatever rules you want. We're kind of going to do our own thing anyway. And that works within a certain framework of people who don't have a reason, either because of their investment or their age or otherwise, to be terribly concerned. The problem becomes when those businesses really want to break out from that kind of bubble community of people. We're building, and we're going to make things happen regardless of what the rules are. And they want to break out into a wider community, attract capital at a larger scale, and engage with more traditional businesses. And that's where, if you don't follow the rules, it starts to become a problem. So many people in the kind of the early stage and the real people committed in crypto just say, I don't really care what those rules. I'm doing my thing, and come after me, see what happens. And in most cases, people don't come after them, and in most cases, they're generally ICO kind of scams notwithstanding, they're generally not making too much trouble. The problem is, and this is where our firm tries to lead people, is you can only do that for so long if you want to scale your business, if you want to engage with other parts of the economy, because just ignoring rules just doesn't work for most folks. And so, back to the US, we are still fairly schizophrenic here in the States in terms of how we want to regulate people, not so much regulate crypto, but regulate businesses that have these new, more decentralized models. Who should be responsible? Who shouldn't be responsible? There are just many questions, just say it at a high level. Other jurisdictions have taken a more laissez-faire approach and just say, let's let people do things and we'll see what happens. And if it gets out of hand later, I guess we'll kind of come back to that. It includes Europe. France, as you know, last year adopted this pact law that was, generally speaking, trying to create, an on-ramp for blockchain-based companies and crypto companies. The UK has been, fairly inviting, and of course, places out in Asia, Singapore, to a somewhat lesser extent, Japan, Korea, but still relatively engaging. Here in the US, it's tough to know what the rules are for different kinds of activities, and that sort of inhibits the people who want to be more compliant with their business.
Yeah, and so I guess when we see companies that apply to dlab, and I see that they're incorporated in Malta or Estonia or I forgot whatever else. They just those jurisdictions
Gibraltar.
seem Gibraltar. They just seem, and I don't know if this is true or not, and I don't know if you feel the same way. But to me, when I read that, I'm like, oh my god, this company is sketchy. Is that like versus being incorporated somewhere else, like another jurisdiction? But it's just for some reason I associate those jurisdictions with like I'm not quite sure what's going on here. I don't know if you feel the same or if that's the correct way to view things.
I think it's a great question. To some extent, there's maybe correlation without necessarily causation. So, some of the folks that do set up in Malta or Estonia or these other, offshore jurisdictions are looking to start with a light regulatory touch. Very often, they're very lightly capitalized, so they don't have a lot of money to commit to regulatory compliance and figure, oh, well, let's start at the cheapest, easiest place, and we'll figure stuff out later. That sometimes may not be that again, Malta's an EU jurisdiction, Estonia as well, and these jurisdictions have rules, but it's a signaling, to your point, Paul, that if you're going to set up there, you're kind of signaling we want to move fast and cheap and we'll figure stuff out later, and that may not always send the best message to the wider community, including people who can provide seed and VC stage capital. May say, well, gee, is this the company I want to partner with? Is this the team I want to partner with? If that's the approach you're taking.
Yeah. No, I mean, at least for me, I don't know if that's the right way, but inherently I'm like, ooh, interesting. But I guess in terms of your point about what the following the rules and thinking about the long term, you look at a company like Telegram, for example, and the ruling came out on their SAF note, which they seemingly followed all the rules, but would love to hear your thoughts, because it seemed like the regulators kind of pulled the rug from under them, or it's a little unclear to me what happened there, even though it seemed like it was done according to.
Sure. I mean, I will really try and be succinct around that because we could totally spend the rest of the time talking about that. I do want to comment. I noticed you probably saw as well. We got a comment in the chat on the cost of setting up in some of these jurisdictions, and I appreciate the comment was slightly a law sort of thing. But the commentator's correct. It's not, especially in places like Switzerland, which we didn't mention, but is another kind of roughly equivalent jurisdictions. It can be quite costly to set up in those jurisdictions. And part of that, unfortunately, I think, is regulators, and service providers kind of extracting value for the low barriers to entry. So you have to look at things holistically. You may have less regulatory lift, but other people may say, well, if you want to be in a place with less regulatory lift, we're going to extract value otherwise through fees, through all kinds of other things. So I think it is a fair observation that being in those jurisdictions is not necessarily the cheapest way to go. It's just the lightest regulatory lift. And those are not necessarily synonymous. So just to agree with the person who made that comment, I think it's insightful. Regarding Telegram, again, there's been so much published and written. I'll try and just give a kind of succinct version. It was certainly clear, the super fast history of what went on. People started doing ICOs in the summer of 2016. The SEC released this quote unquote DAO report about the failed DAO, and actually the summer of 2017. Excuse me, the DAO blew up in 2016. and they released a DAO report. The DAO report signaled for the first time to participants in the market that the SEC was likely to kind of apply securities laws to sales of digital assets. The problem was the example that they chose, the DAO, really looked quite a lot like a traditional company. It was an investment, effectively a decentralized, VC firm. And so many people continued barreling along in the fall of 2017, saying, well, we're doing things that are different. And in fact, Protocol Labs and a law firm came out with the SAF paper and said, well, look, here's a compliant way of doing things. Everybody got real excited about that and started generating a lot of enthusiasm. What really changed was in December of 2017, the SEC had a number of smaller enforcement actions against people who were clearly, fraudulent and just ripping people off, and everybody again disregarded those. There was an enforcement action against a company called Munchie that was trying to do what would otherwise seem like a normal token sale, and the SEC concluded that that violated the securities laws. At that point, I think most people really should have been on notice, including people like Telegram and their advisors and others, that something, there was a bit of a disconnect here. What happened, though, is that many people continued to move forward without engaging with the SEC, and I think that's really, to your question, did they have the rug pulled out from under them? They chose to ignore an engagement with the SEC and instead move along on their own and move fast and break things. And people should know there's risk associated with that. Maybe you get out in front and you're able to just get established and it's too late for regulators to come and impact you, but maybe you're not. Telegram obviously found out the hard way, in my view, that not engaging with the SEC had very, very serious consequences. I mean, fundamentally, I think the takeaway from what the judge said in the final Telegram order is, long before digital assets existed, people proposed what were ostensibly commercial schemes. I'm going to sell you something, Paul. Don't you want to buy whatever it is I have to sell? And, as people know, in Howie, it was oranges. There were cases about, animals that were being grown for fur. There were cases about, whiskey that was aging in barrels, many, many things. All of them had one thing in common. I'm going to sell you something and you're going to buy it from me, expecting not to consume whatever it is I'm selling you, drink it, juice it or do whatever thing with it, but I'm just going to basically resell it at a higher price. All of the Howie cases that preceded Telegram had this similar pattern. Telegram, unfortunately, fit right into that pattern. The initial 75 purchasers who entered into the SAFT agreements were basically taking the same step. They didn't want to use the gazillions of gram tokens they were buying. They were clearly doing an investment. What the judge was able to determine, and I think this is quite insightful, is that's not like a normal investment. When you buy stock in a company, whether you resell the stock or not has little to do with the value of the stock itself. What it has, the value of the stock is, does the company successful? Is it making money or not? However, with the Telegram tokens, if nobody ever, if 75 people who bought the Gram tokens never resold them, the network would not exist, there would be no value, and the $1 billion would implode and just have no use. The only way the investors were going to recoup their value in the SAFs to buy prospectively the Gram tokens was to resell them. And the only people to resell them to was the public. And the judge said, I see this very clearly. All you accredited investors are doing is acting functionally as agents for Telegram to distribute these tokens to the public, because of necessity, this whole scheme doesn't work unless hundreds of thousands of people are all using it. That's fine. You can do that, but you didn't register with the SEC, and that's where you made your fatal mistake.
Yeah. So you're selling.
As quick as I can run through.
No, that makes sense. I mean, that I think that's a problem. You're just selling to someone else who, you're hoping someone else is going to come in and buy at a higher price.
Exactly.
So I guess that leads into, the new, what I consider to be sort of an evolution of what the ICOs were to IEOs, and now we're launching governance tokens.
Yep.
There seem to be coming like thick and thin, and I find that there's already too many. But would love to get your thoughts on DAOs. I'm sure you work with them, considering how they sort of fascinated you early on in sort of the traditional world. So I'm curious to know, can you say which DAOs you worked with, and what are your thoughts generally on DAOs? And then we can expand further.
Sure. So I can't really talk about specific clients,
Yeah.
but I can talk more generally. I had a short tweet thread about this, and anybody who's vaguely interested, please feel free to follow me on Twitter. It's NY Crypto Lawyer on Twitter. You know, the idea of self governance of an enterprise is fantastic. It's really cool. Normally, you know, if you're going to have self governance of an enterprise, it's because you and your buddies got together in a garage and it's the three of you guys and you all know each other. And there's physical geographic proximity that allows you to make decisions and move the venture forward. Um, the internet pre-blockchain allowed you to communicate and interact at scale and distance, but it didn't allow you to have automated economics. So in the internet era, we see businesses that are spread out and distributed because all these tools we have, but they don't have the actual governance. Still hasn't changed anything. The DAO is a DAO is the next step in that. Not only can the participants in the organization be geographically distributed? They don't have to be in proximity to make decisions, but they can also now have a very clear and automated process for decision making so that no one person is necessarily running the show and they all can effectively contribute to the governance on an equal basis without there being necessarily a president who's making final decisions, etc. It's a fascinating idea. My concern, I would say, and I think Paul, you and I have talked about this a little before, is that for that to really work, what you need is a community of people who are really engaged in that project. Because to make good decisions about any organization, decentralized or other words, you need to be two things. One, you need to be informed about what is going on in the project. So that requires a level of transparency about what's going on in the project. Many of these DAO projects have not had the highest levels of transparency about what's going on. So that's concern number one. But concern number two, the participants in the DAO and the holders of the governance tokens have to actually want to govern. And so the information needs to be transparent and timely, but you also need a community of people who are going to consume that information, think about it, and provide valuable input back into the community. The problem is in real life, there are not that many people who have that much time to commit to that many communities. You may have one or two that are deeply personally of interest to you. They may be technological, but in many cases, they may be religious. For example, you might be in a religious community and want to do something. You might be in a social community and share an interest. Governance takes time, and I think this is what the governance tokens really miss. If that's what you're really doing, you need a community of people who are engaged. What we've seen with many of the governance tokens, and people have posted on Twitter, is that some of the largest holders of the governance tokens are just not voting, not engaging, not doing anything. And they're basically devolving any of those decisions back to a handful of people who are functionally running the DAO as a practical matter, in which case all you've done is reinvent the company or the corporation, except with a lot less clarity about what your rights are as a minority holder and all these other things. That concerns me. So I'd love to see continued innovation on the DAO. And I'll give a shout out to one of my favorite lawyers in the space, a couple of my favorite lawyers in the space. One is Ross Campbell, who works with Open Law and does a lot of stuff, has done a lot of writing and thinking about this and trying to develop these systems. And another's a former colleague of mine, Gabriel Shapiro, has done some great writing and some great thinking. But you've got to, if you're an entrepreneur out there and you want to sort of develop a DAO, think about, are you really creating a community of engaged participants, or are you really just disguising the fact that you want to sell securities, and don't want to call it that because it's a big pain? I hope it's not the latter, but
no. Yeah, no, but also, even to participate in a DAO today in the blockchain world, you need to there's a learning curve, like a technical learning curve.
Absolutely.
For you to even participate. So, not only are they launching these governance tokens, but the people who even understand how to participate is like tiny. It must be so infinitesimally tiny. And most of the time, you look at these DAOs, it's like mostly the people who launch, it's mostly the company itself. So it's the people running the DAO is the company itself. It's not even, so it's not like, to your point, it's not like there's no real community, so to speak. And I don't know, I just find it, I guess another question I had is, do you find that the launch of these governance tokens actually ironically add a layer of bureaucracy and red tape that prevents a startup from like kind of growing and reaching scale and breaking things that ironically a more centralized solution would be able to do. And then like that they're doing it too early in their, like you, for example, Uma launched one, or even Compound. I know it has a $1 billion valuation, but it's still really, really early in Compound's sort of life cycle, right? So ironically, do you think they launched the token too early, where it's going to inhibit their growth in terms of getting to scale?
Well, it's a great question. I mean, so many things, kind of unpack there, Paul. The first is, and particularly in the the ICO era, when I was talking to a lot of people who wanted to start kind of protocols, is this really fundamental challenge that you're not really starting a company, or if you are starting a company, it's a very, if you did it the way people talked about, the protocol that you're sort of establishing is a set of rules. And I would often analogize it to sports. I'm a baseball fan, so you could invent a game called baseball, and that has a set of rules. The pitcher's rubber is 90 feet from home plate, and first base is here, and 4 balls is a walk, and 3 is a strike, and 3 misses a strike. And that's a protocol. That's a set of rules, right? And anybody can take that protocol and go, you want to play baseball in a sand lot in Brazil, feel free, right? Because it's a publicly available protocol set of rules. Major League Baseball and the teams that play it are businesses. One business, doesn't really, work. What you need with a decentralized system is many people to integrate and use the protocol and create these businesses. The problem is, how do the people who you're starting a new sport and you're going to call it, XYZ ball, and it's unheard of. The problem is, it may be a brilliant sport, but if nobody's playing it, if nobody's using the protocol, then it doesn't have any value. And the issue then becomes, well, who's going to promote the sport? Hey, you thought baseball was good. Wait till you see my sport. And what many of the ICO projects did was confuse these two pieces, creating a protocol that's free and open to use, and creating a business that is promoting this use. And they sort of refused together again and became sort of one thing. I would love to see the model progress where people create a protocol and step away and just say, look, it's out there, and if you want to use it, let's see it grow. But that's not really a business, right? That's just, I created something and I watch from afar as it perhaps grows up or doesn't, as the case may be. People want to have a business, but if you're going to have a business, then you ask yourself, how are you going to make money, and how are the equity holders going to be rewarded? If they're not going to be rewarded by reselling tokens in the future, which is a problematic model, how are you going? And if you're basically creating a model where you're rent seeking from the protocol to provide value to your equity, then you're kind of running the protocol and it's not very decentralized. And what did you really accomplish there? So for me, when I talk to early stage companies, I really ask them to think a lot about those questions, which are partially legal, partially regulatory, and just partially economic and business oriented. And I think that's the conundrum that I hope kind of answers your question, Paul, which is, if you want to create a decentralized model, when do you sell the tokens and how do you capture the value? And then in most cases, people who are using the protocol want to know that there's somebody sort of fixing things when they break. And even if we look at some of the largest, open source, FOSS, free and open source systems, there's generally capital providers behind them paying developers to spend time, monitoring, whether it's Linux or, Apache or any of these things. They don't exist in a complete vacuum. The companies that use them still support them. And how exactly, are those economics going to work? So a lot of questions, fascinating area, hard to answer.
Yeah, no, it's just because it's becoming, everyone seems to want to do one now. It's like becoming in vogue. It's like ICOs, IEOs by the wayside, but now launching a governance token, and it sounds great, decentralized on Uniswap. It sounds great, but I don't know. We've seen 3 or 4 already this year. It's pretty wild.
Absolutely. And again, the huge increases in valuation, and clearly those increases in valuation, without speaking about anyone in particular, right? Are not about the interest in the governance, right? They're about the fact that they believe this is a scarce resource, and people are going to, over time, if the network grows, it's the same business logic as applied to ICOs, right? Which is, there's only so many of these tokens, and people are going to want to engage with this in the future. And it just, we're gonna have to see where they'll. Because I encourage people. I love the idea of DAOs. I think it's interesting. Personally, I'd like to see progress made with DAOs in pre-existing non-technical communities. I mentioned religious communities because those are really natural areas where people share a commonality. They want to be informed, and they're willing to dedicate their time after they put the kids to sleep or whatever it is to spend a little time on this. This is something meaningful to them. Or community programs, and again, folks like Ross Campbell have been looking at areas like Bushwick, like community governance, things like that, where and let's establish the principles of how the DAO can work, not in a purely speculative economic context and yield farming, right?
Yeah, well, yeah, it's the yield farming is another thing that it's like it's I don't know, I can't, it's like one of those things that I can't wrap my head around yet. But anyway, it's like
feels like it's not going to end well.
Yeah, it totally completely agree. But to be fair, I need to do some more reading. But my head spins when I start reading about it. But if, by the way, if anyone has any questions, please dump them in the Q&A. But I guess, last question on DAOs is that people talk about, well, in the legacy world, people, are equity holders. They're thus entitled to a vote in terms of matters pertinent to that company. What they're doing anyway is that they're delegating to Vanguard or whatever, which Vanguard is in turn delegating to these large firms, which typically always vote with the company. So that model doesn't exactly work either. So I guess, in effect, they're delegating their vote. There have been ideas in sort of the blockchain world where you delegate your vote, and I'm curious to hear about your thoughts on that, because I'm totally for creating a new and better way of doing things. I don't know what that is, but there's promise that we can, in this blockchain world that we live in, that there's the possibility to do that. But I wanted to get your thoughts on sort of delegating. Or because again, to your point, no one's going to want to hold 50 governance tokens and vote on 50 projects when they come home from work and they're a home builder or whatever, right? It's just not consistent. So they're probably going to be delegating or something. I don't know what the solution is, but I don't know if you have any thoughts.
Absolutely. I mean, it is sort of broadly analogous to staking, right? Which is a similar sort of, issue in the blockchain community, either because you can't afford, 32 ETH for ETH 2.0, and so you want to be involved in supporting the Ethereum blockchain, but you can't, reach the minimum staking. So you may, work with a staking pool. You may do staking as a service. Governance as a service is a very correlated concept there for people who want to engage, but only to a point. The challenge is, we do have these societal norms, whether we like them or not, that provide a certain level of protections. In fact, if you want to use the word protocols, that's okay, right? There's just a set of rules that apply of when people's economic interests are at stake. And we as a society feel that, many people are not capable of, just being in the great unknown of, buyer beware. That didn't work out. You'll learn something from it and not make the same mistake next time. That's not, how this, community we call the US at least works. We believe that if you're going to be engaging with people fundamentally from the perspective of investment, how do I take what I have and turn it into something more? Right? Which is basically, we all have limited capital. In the future, we'd like to have more. How do we do this? Well, we believe as a society, there are a lot of rules that should apply to this. Going outside those rules runs the risk of recreating many of the problems that we've had pre-blockchain in the blockchain world, because many of the things that the reason we have all these rules in the first place in the non-blockchain world is because people did a lot of stupid ass shit, and people got burned. And when people got burned, eventually, don't do that. Don't run down the hall with the scissors. Bad idea. What many people in the blockchain community are reinventing. But if we ran down the hall with the scissors, maybe it wouldn't be that bad. And then after, somebody fell down and got it in their gut, maybe that's not a good idea. So I'm taking the analogy a little bit here, but I think you see where I'm going. It's great to reinvent capital aggregation in a more decentralized format. But doing that without being mindful of the policy reasons why many of these rules that you want to disregard are in place, I think is a mistake, because they're oftentimes, as frustrating as the rules may be, very good reasons for them. And being oblivious to those reasons runs the risk of replicating the problems and creating the same issues all over again in a decentralized. For example, just quite specifically, we have many rules in securities around trading, disclosure of trading positions, what you're doing in market manipulation. That's because, if left to their own, many traders have undertaken many, many manipulative devices. In crypto, to the extent crypto are not considered securities, there is a lot of market manipulation that goes on that's harmful to the overall economy, because people say, well, gee, people are screwing around with the price, or I don't know what's going on, and then they're reluctant to invest. So I personally, just to sum it all up there, highways that have lanes on them, people can go faster than just a wide open field where everybody's doing bumper cars bumping into each other. And I think we have to respect the reasons for these regulations. We don't have to, we might make improvements, but we shouldn't simply just say we don't need any rules at all because there's blockchain.
Understood. I'll end with this, since we have some founders on the call.
Sure.
You interact with a lot of founders, particularly,
Yep.
And clearly founders that are building blockchain related companies. So just like on a super high level, what should founders watch out for? What are some general common mistakes that you see all the time that are like catastrophic mistakes, or, mistakes that you should just avoid, to save time and energy?
Well, there's certainly the catastrophic type, much bigger mistakes, and then there are more modest mistakes that can still be quite costly. On the catastrophic side, and we saw this, I think, to some extent with Basis, which wound up, was going to have some, broadly speaking, DeFi lending platform, and they realized they attracted, as far as I'm aware, I'm not associated with them, like $60 million, wound up having to basically refund all the money to investors. I would put that, in the catastrophic, because they had not fully developed how their platform was going to work from a regulatory point of view. And as I know, because I've talked to some of the founders that are lucky enough to work with dlab, it's a catch-22. You don't have a lot of money to invest in scoping out a regulatory framework, but doing the best, whether it's for talking to friends, talking to people who mentor, through an incubator, going online, but like just trying to get some sense of what those key regulatory drivers are, so that you're not way outside the lines. Because if you are, there's a good chance that nobody's paying attention now. And I saw, I won't mention them, but I saw like a brilliant DeFi startup. I thought it was an excellent idea, and they're chugging along at the moment, with very, very modest scale, but they're really violating the law. I mean, and at some point, if they scale up, somebody's going to come in them and say, hey guys, no. And that's the catastrophic problem. So I would say understanding the regulatory framework that applies to your business, and having at least a reasonable sense that you're not way outside the lines. That would be the number one thing. By hook or crook, friends, incubators, wherever you can get that information. On the smaller scale, there's a lot of, and certainly advice I'm sure you give the companies that work with dlab, but there's a lot of smaller things that still can be very, very important. What the roles of the founders are vis-a-vis, in particular, a blockchain project where you may not have such obvious corporate roles, but it's a bunch of developers working together. It's at sometimes, we've seen a lot of movement among developers in blockchain projects where there was no clear roles early on in terms of what people were as a group of developers developing something. And especially if it's going to be open source, there's nothing really that stops the project from kind of fracturing if people, are in disagreement. So having, a good sense of, within the founding team, who's going to call the shots at the end of the day, and we're all aligned with this particular vision. People too often that I see are dive into things loosey-goosey and then hit more fundamental constraints, and then wind up not being able to see eye to eye. You can never prevent that completely, but honest and forthright discussions at the beginning can be very important. You highlighted, Paul, a very important thing, which is where you're organized. If everyone's in the U.S., I think organizing an entity in the U.S. is logical, makes sense, and it's pretty down the middle. But many projects have people from Europe, have people from other jurisdictions, et cetera, and then it may not be as obvious. And working through those problems and choosing the right jurisdiction and the right kind of framework can be very important. Another question in the blockchain world is, is a foundation make sense? How does that work, et cetera? That's a common topic that a question we get. I'm generally been pretty skeptical. I think history has not played out well. The Ethereum Foundation continues, but that's a kind of unique sort of circumstance. But there may be times when you want to do that. Hedera is a project that has a separate sort of governance council foundation, and that's, as far as I can tell, worked out fairly well for them. So working through those sort of things are important as well. And I never like to not talk about tax. We don't provide tax advice,
Yeah.
but especially if you're bringing equity in, thinking about that is very important.
Yeah. No, it's I guess it's more of a thing. It's like you might as well just not throw caution to the wind, because you can do that later if regulations become lax. You might as well just run a tight ship for the time being.
Yeah.
See where the world's going. And you can always go in that direction, but you can't go in the opposite direction, right?
Yes.
You can't let caution, let caution, whatever that phrase is, caution find the wind or whatever it is, and then go back and tighten up ship later down the line, because you're probably going to be screwed.
I do want to put a specific point on that, because obviously companies in the Valley are known for the move fast, break things approach. People have looked at businesses like Uber and others that have disrupted lightly regulated areas, for example, taxi stroke ride sharing, and kind of they just willy-nilly went in, broke the rules, and built a big market share, and then got the rules remade in their model. I think it's a mistake to extrapolate from lightly regulated areas like ride sharing to heavily regulated areas like finance. Regulators in the financial space just do not approach things in anywhere near the same way. They're also at a national level rather than a municipal level, and it's much easier to make a much bigger mistake. So, sort of saying, "Well, I know I'm playing around with financial regulation, but I'll figure it out." I mean, certainly to remind everybody, violations of money transmission can result in jail time. I mean, if you have the bad luck to turn out to facilitating a terrorist or someone who's doing something really bad, and it was your platform that they just chose to use, probably through bad luck as much as anything else, you can go to jail. So it's not just, oh, I guess I'm going to have to do something else with my developer skills. Really bad outcomes can occur. So move fast, break things, fine in some areas, not so good in others, particularly when financial matters and financial crime is potentially out there.
Yeah. I guess so. Since we're almost out of time, I guess the last question I'll end is: what are some of your favorite blockchain applications or that you play around with?
Sure. From early on, I was a big fan of NFTs. I continue to think NFTs provide some of the greatest opportunities. I think the guys at Dapper Labs, who obviously developed CryptoKitties, was an amazing proof of concept. I think we saw as the CryptoKitty phase peaked and waned. It choked Ethereum. As some of you may know, they're developing a platform called Flow, which is designed for NFTs, and we have a relationship with them. But we think they're absolutely terrific, doing great things. I think some of the gaming platforms that are also involving NFTs are pretty cool. We've looked at a couple. I don't want to mention too many names, but people doing stuff where you have unique assets that can kind of be in the gaming environment. So projects like that, I think are really exciting. In terms of wider protocols, I'm excited by things that folks like Hedera are doing, trying to kind of bridge a corporate and permissioned kind of environment in some ways. I think the future is yet to be written, but it's an exciting project nevertheless. I'm really interested in decentralized storage, and I'm disappointed that we haven't seen as much progress. I saw, the statement at the Consensus conference that maybe Filecoin is really going to launch this summer. I'd love to see that. It's an incredibly exciting project. It's such a natural place to apply decentralized economics. So I'm rooting for those guys and hope that can work out. The smaller projects in that space have yet to really gather traction, but I'd love to see those. And there's some newer entries. There's a team called Fleek that are doing some pretty cool things with
Mm,
decentralized kind of edge storage. I'm also, interested in some of the projects like Helium that kind of touch real world activities, trying to create a mesh network of Wi-Fi. That's, I think, very exciting, and having kind of a peer-to-peer decentralized, mesh network that can operate alongside perhaps other, established, telecoms and network
mm,
providers. I love the Foam project. As far as I can tell, which is, some may know, it's a project incubated by Consensus around geolocation. And again, similarly, you create sort of a geolocation hub, and then you can broadcast, creating mapping of the world in theory on a decentralized basis. I think they're still sort of getting their footing, but
yeah, of course. Yeah.
but in terms of concepts, I love those concepts, and certainly among the DAO side of things, I think there are definitely some interesting things going on. Again, to give a shout out to my former colleague Gabriel Shapiro, doing
Mm,
really interesting things with Moloch DAO and stuff like that, and trying to find a middle ground between a regulated, securities, but also sort of a decentralized framework. So I think that's very exciting as well. Yeah, I think the things I'm most skeptical about, in part because I come from a finance background, are the DeFi products. And I wish, Compound tons of success, and all of these products. But where I get a little stuck, Paul, on the DeFi side, is it works if you have existing non-interest bearing digital assets to stake, to get, to do the lending and the other things. But if they don't really provide meaningful finance, because first you've got to get, $1,000 worth of ETH to get a $500 loan. So if I don't have $500, like buying $1,000 worth of ETH to stake is not going to work.
yeah.
And it really heavily constrains. And I know there are some folks out there that are trying to develop products that will actually allow you to lend on a decentralized basis unsecured. I spent a lot of time watching people lend on an unsecured basis. Boy, is that a tough area.
Yeah. You take a look at Lending Club, right? Yeah. It's tough.
Yeah,
Yeah.
that's exactly right. And
Yeah.
Prosper, and absolutely, there's a long line of very
Right.
challenged businesses in that
Yeah.
space. So I think places where, just to wrap up, where blockchain can intersect with real life and real life applications like gaming, pocket full of quarters. We didn't really touch on that. I think
Yeah.
one of the things that our firm is best known for is getting the no action letter, still the only no action letter for selling an ERC20 token without SEC registration. Projects like that that can interact with real world people who aren't blockchain experts. We kind of
Yeah.
have to break out of this bubble to have these projects work. And last shout out, we think of crypto, we generally, I think a lot of people look negatively at, purely permission systems, but I think in the world of finance, that's actually the the future, much more so than building on Ethereum. Just speaking very candidly, and I think that's the way, at least, is the on ramp over the next 5 years, and maybe 5 years from now, Ethereum or other platforms will be sufficiently robust. But for right now, to work at scale, whether it's something like Symbiont and what they're doing with Assembly, or a couple of the other folks in that area, I think that's the near-term solution as we bridge our way. Is, a permission DLT the final end state? Maybe, maybe not. But I think it's a realistic way to get more people engaged in the idea of using blockchain tools in the real world of finance at scale.
Yeah, no, it's refreshing to hear because, like, everyone's so focused on DeFi, and it's fair because it's where all the users are, even though, it's still relatively tiny. But it's refreshing to hear that, like, I agree with you completely. Gaming, or any of these other industries that are not sort of trading financial products, which at the end of the day is kind of a zero sum game. Like, it's just these savvy traders speculating, right? It's who's that really, is that helping the world? Is that really doing anything? And so it's refreshing to hear that, we're in the same boat, or we're waiting
Yeah,
for that use case outside of, finance.
outside of the
Which,
bubble, right?
yeah, outside of the bubble, because where real people can start using it and interacting with it. I mean, finance makes sense because it's the most obvious, I think, initial use case. At least for me, it was, but it's very refreshing to hear. I will end with this. So, is there anything that the DLab community, how we can help you? Is there any asks that we can help you with?
No, I mean, you guys are especially, in the New York area, there's a relatively finite number of folks out there who are really incubating really interesting projects. And I'm just excited. I'm delighted to be able to mentor some of your teams, and really just, these are very difficult times, especially for, incubators that, really depend on proximity, right? And getting every people together and talking and sharing ideas. It's not an easy time for that. But, keep doing what you're doing. You're really helping the community. Folks who don't know dlab or SOSV really should get to know the team. Paul's amazing. He's a great friend and a terrific mentor. And yeah, we have a wonderful relationship between dlxLaw and you guys, and many other law firms that are out there. You know, just let's keep building, right, and
Yeah,
keep
of course.
trying to progress things. But thank you.
Yeah, yeah.
Thank you for your
No, of
time.
course. Thank you very much for your time. It's been a real pleasure to speak. And enjoy the holiday weekend.
You as well, and everybody else.
Yeah.
Thank you for joining us.
Thank
Take
you.
care.